Alrighty, what is going on, everybody? Welcome back to another CYPRX tracking video breakdown. In today's video, our focus is going to be on the digital asset XRP, and I'm going to show you guys why I was confident enough to give you all this call out in the private Discord, particularly in multiple sections across the board. I sent this in the premium chat, and I sent this in the El Chapo chat, where I said if at any point in time XRP can hold above 55 cents, i.e. that threshold, I'd be looking for a move into 60 cents. Remember, I'm a leveraged trader, so anybody that's trading leverage, this was an absolutely phenomenal trade to be trading via intraday positions by understanding market fundamentals, coupled with technical analysis and sound psychological control, okay? So I'm going to attempt to give you guys a step-by-step process, why I was confident leading up to this price action and giving you guys this technical analysis play, showing you all fundamental factors supporting my bias, coupled with technical analysis. So giving you guys that layer effect, so that way, hopefully later on down the road, you can utilize and implement the same sound principles to give yourself a better directional bias and more confidence backing your trades. Okay. So as you all know, the vast majority of you guys who have been heavily involved in this community, the level of accuracy in which I trade with and give you guys trade predictions with, I usually don't put an analysis out unless I'm like 95% sure the trade is going to play out. That 5% of uncertainty is obviously, of course, due to the uncertainty of the market. But I usually do not put a trade analysis or idea out to you guys unless I have fundamentals backing my thesis, sound with technical analysis, and obviously, of course, the confidence behind my experience in the market. All right. So we're going to go over that in extreme detail. Now, overall, this whole analysis started just showing you guys these charts. So on the right-hand side, we're going to stick to the 15-minute. We're not going to go any lower than that for the sake of the length of this video breakdown. But you can see this green circle right here is the time in which during yesterday's Asia session that I put the analysis out to you guys. So before the move played out, as always, I said to you all, Monday, February 26th at roughly around 6:30 p.m., I said, if at any point in time XRP can hold above 55 cents, the threshold, I'd be looking for a move into 60 cents. So why was I saying this? And why up to this point was I confident in giving you guys this analysis? Well, we're going to go back to this area here, and we're going to jump to the higher time frame and slap on some fundamentals. And we're going to cover what I was seeing in the market before leading up to this price analysis that I gave you guys and before the execution. All right. And then obviously, of course, the supporting fundamental factors and the technical analysis that played out today to further support my confidence in this trade to actually hold it through the New York session to where it is at now. My stops as of right now are moved to break even. I'm holding this trade on BidFi. If you guys don't know, it is the exchange that Ruby shared in the chat that offers leverage traders for leverage trading for US citizens. Okay. So give me just 1 second. Let's split the screens and let's go to the higher time frame. And I want to take your attention back to the two fundamental analysis pieces that I put out to you guys. So yesterday, roughly around, let's just go look at timestamps because I love to give you guys timestamps to show you all that I'm putting this information out at a viable price point. Okay. So I don't just put information out randomly. If you guys have noticed, I'm very particular with where I put information out to you guys in the form of time increments. Okay. So when I gave you guys this this Monday recap, okay, you can see the time, it was roughly around 2:24 p.m. Okay, Monday afternoon. So what you'll notice here is that I mentioned that the dollar index, which measures the greenback against a basket of currencies, slipped by roughly around 0.11% on Monday. So we did see a dollar decline. This decline and what it was attributed to was influenced by the euro strength, which was driven by remarks by ECB officials. Additionally, we also had the dollar facing pressure following some disappointing US new home sales reports. Okay, so we did see a temporary decline in the dollar yesterday. Now, if we go correlate these news fundamentals that I was talking to you guys about over on Forex Factor, you can see yesterday, Monday, February 26th, we had new home sales come out, downbeat from the forecasted reading, came out at 661,000. And you can see the time in which this came out, 7 a.m. Pacific time. So if we go correlate on the higher time frame, 7 a.m. Pacific time, when this news fundamental came out, This green circle, we're on the hourly time frame, is when this news fundamental came out. Okay, remember, we're going to shift from higher time frame and then we're going to jump down to lower time frame when I gave you guys this analysis. What I'm attempting to show you guys is why I was so confident in giving you guys this trade idea, right? So focusing our attention on this specific candlestick right here, identified with this green arrow and the green circle, you can see down at the bottom of my screen, 7 a.m. Pacific time, i.e. I have my chart set to Pacific time. Okay, you can see Los Angeles, right? So this green candlestick is where this news fundamental from the US data front came out, i.e. driving temporary weakness to the dollar, prompting a risk-on market mood, which I explained to you guys in this breakdown, driving demand for risk assets. Now, prior to this news event, what pattern and formation do we see here in this area on the hourly time frame that I try to teach you guys to identify? Here you can see a market maker reversal pattern where they set up traps beneath lows. They liquidate those lows. We then have higher lows that come in after the liquidation events. And then we have failure swing lows that lead to higher price action. So remember, I attempt to try to teach you guys how I trade, and is that on the higher time frame, if market makers are not interested in scooping up any further liquidity that exists beneath lows, these market makers are interested in making money, okay? So where else are they going to push price if they're not interested in making new swing lows in the market, i.e. breaking previous market structure, making new lows? Where are they most likely going to attempt to push price action? On the higher time frame, they're going to target what? Previous highs, right? So noticing yesterday, before I gave you guys this analysis, remember, we're on the higher time frame. I didn't give you guys the analysis until price action was here in this area. What was I seeing before I gave you guys all that analysis? I was seeing a market maker pattern, i.e. liquidation of lows, higher lows that come in after, failure swing lows, i.e. bullish order flow, or the definition of bullish order flow, higher low, higher high formation, okay? So this entire bullish move on the hourly time frame took out this entire previous bearish move, and we failed to create a new swing low in the market. So this to me was a new bullish move, i.e. momentum on the higher time frame that we should be trading with, looking for higher time frame targets to the upside. So my most immediate targets that I gave you guys in the chat was anything pushing towards 60 cents to come and take out these highs. If the market makers are not going to target lows anymore, then they're most likely going to target trap liquidity above highs in the form of open sell positions that exist from uninformed retail investors that either still have their positions open or are hoping for some type of reversal once price comes up into a premium holding positions. Okay, which again, obviously, of course, could potentially take place. I don't think that's going to happen as of right now. We're going to need some type of fundamental catalyst to reverse this price action, like higher inflation readings on Thursday. But as of right now, the risk sentiment is to the upside. Dollar is staying suppressed below the major psychological level of 103.9 and 104. And we saw supporting fundamental factors driving demand for risk assets weighing on the dollar, right? So not only did we have technical analysis play out before I gave you guys that technical breakdown where we were looking for higher targets, but we also had supporting fundamental factors driving demand for risk assets, i.e. massive inflows into Bitcoin ETFs, weak dollar yesterday due to dwindling economic data, and other hawkish central bank speakers like the ECB, which obviously, of course, if we see a bullish euro, that tends to also weigh on the strength of the dollar as well, okay? Prompting a favorable risk-on market mood. Now, that took place yesterday. So now that you guys have the higher time frame bias, again, remember, we like to layer. The layers go in sense of this order. Fundamentals, right? Then you go down to the higher time frame, i.e. for me as a day trader, I like to stick to the hourly, right? Because we know that unless there's some major volatile event taking place in the digital asset space, volume and volatility tends to remain relatively low, okay? So you don't want to be looking for intraday scalp targets on the freaking 4-hour and 8-hour time frame. You want to be looking for targets, at least for me personally, I look for them on the hourly time frame, targeting hourly highs and lows. Okay. So these were my targets and my areas of interest. I'm probably going to fully take profit if we can take out this high here. All right. If not, my trade is protected. I'm not going to close this trade or partial out. I'm just going to wait to see if we can come and take out this high. If we come and take out this high, I'll close this trade in full. All right. And I'm willing to be patient and wait. Okay. So higher time frame out of the way, fundamentals before we came into today's trading session out of the way. Any questions on the higher time frame breakdown, what I was seeing up until this point before we jump down into the 15-minute time frame? Okay. All right. So now let's focus on the 55-cent threshold before we go down to the 15-minute. Okay. What I was looking at is seeing all of these highs here. You can see I hate this terminology, but it acted as some sort of resistance where we can see that whoever's in control of this market found it an interesting price here to be selling from, right? So for me personally, what I was seeing is that if we can flip this psychological level and turn it into a quote unquote support region or find demand in this area, then most likely that means that any sellers that existed here in this area have now been overpowered by buyers, which is why I was giving you guys that 55-cent threshold. I was seeing that predominant sellers existed in the market here in this area. And so if market demand could flip where previous sellers' interest existed, then that most likely meant that we were going to continue higher to target previous higher levels, i.e. market searching for a new premium. So if this premium was not interesting enough for whoever's in control of this market, I just like to say banks, whoever's moving price action on XRP right now, if this premium was not enough for them to be selling at, and they then turn this into a demand region, where are they most likely going to look for higher premiums at? Previous highs, right? It's just logical principles that you need to kind of understand when you start to involve yourself in these markets. So that's why I was giving you guys the significant psychological level of 55 cents in the breakdown. Okay. I don't even know where it's at. There's so much stuff in here. All right. So now let's jump over to the lower time frame so I can give you guys the fractal mindset and leading up into what took place today, i.e. the trade execution. And then we're going to go over the fundamental supporting factors that drove my confidence in this trade that I gave you guys, again, well in advance. So yesterday, if we go and we look at the El Chapo chat, when did I give you guys the pre-plan analysis? So you can see here, this was the pre-plan analysis for today's trading session that I gave you all yesterday at roughly around 6:36 a.m. February 26th. So again, way ahead of the curve as to what we should be paying attention to for risk on, risk off market mood today. If you open this analysis and you read it and you go to the middle section, I said, turning to Tuesday's agenda in the U.S. data front, significant focus lies on durable goods orders month over month, projected to exhibit a slight decline of negative 4.7% from the previous readings of 0.0%. Similarly, core durable goods orders month over month are also expected to show a modest decrease from 0.2% to 0.5%. A decline in these indicators suggests potential weakness in manufacturing activity, which could negatively impact the strength of the US dollar. Investors typically interpret such a decline in activity as indicative of reduced consumer spending and consumer economic activity, thus dampening confidence in the currency. So I gave you guys a full fundamental breakdown of what to potentially look for, okay? And I said, for intraday positioning strategies tomorrow, a scenario of weak US data characterized by downbeat durable goods orders and neutral consumer confidence readings would likely favor a risk-on environment, okay? This sentiment could weaken the dollar during the New York session, prompting buying interests in scenarios such as gold, GBP USD, and cryptocurrencies. So I gave you guys that pre-planned analysis. What I was personally looking for on last night's Zoom call, I even mentioned to you guys, as I said specifically, I was looking for a reading of something worse than what the forecast was. And you can see right here, the forecast yesterday was negative 4.9%, and the actual reading came out at negative 6.1%, which is exactly what I said last night on Zoom call. Actually, it completely blew it out of the water. I said negative like 5.3, I think, and it came out at negative 6.1 for anybody that was on the Zoom call last night, right? So with that in mind, again, given the pre-planned analysis, This green circle was yesterday at 6:30 a.m. when I gave you guys this analysis, okay? Where I mentioned to you all for intraday positions, if we see weak data for today's New York session, we're most likely going to see buy continuations. So keep in mind, when I gave you guys this fundamental breakdown on the higher time frame, we already went over, I was already seeing all of those technical analysis things play out. Coupled with where this green arrow is at 7 a.m. yesterday, that weak US existing home sales came out as well, which drove strength for XRP, i.e. risk assets. Now, fast forward into Asia session, where I gave you guys the fundamental breakdown. Now let's get into the technical analysis, what I was seeing. So is anybody confused on the process so far leading up to the point in which we are at now? When I gave you guys this technical analysis strategy, what I was seeing. I was seeing higher time frame technical analysis plays failure to create new swing lows and an attempt to break previous supply ranges to create a new demand zone to then look for further higher premium prices, which is what XRP is doing right now. Okay. Couple that with weak US data yesterday, dollar staying suppressed below key major psychological levels of 103.900, prompting a risk-on market mood. So with that being said, on the lower time frame, what I was seeing is, again, tracking previous session buy areas. I was saying to myself, as long as we can remain above key areas where banking institutions were buying from previous sessions, I'm going to continue on the 15-minute time frame, given the fact that we've already broken down the hourly time frame momentum. As long as we can hold above 15-minute structure, I'm going to continue to remain with a bullish bias. But you can see here, New York session was buying from roughly around 53 cents. Giving you guys this trade idea during Asia session, they were predominantly buying roughly around 55 cents. Now let's get into the technical analysis. So this green circle, again, is where I gave you guys this technical call out. What I was seeing a break in previous market structure. So all of this consolidation here and this sideways movement, i.e. market makers trying to test the strength of sellers and test the strength of buyers here. Buyers overpowered sellers, creating a new market structure A to B move that broke all previous bearish market structure. So now we're operating in a new bullish leg during a new trading session. This is now the Asia session, and you can see that they were buying from roughly around 54 cents all the way up through roughly around 55.5 cents till they sold their positions, right? And then pass price action over to London. So with that being said, all I was doing for technical analysis, we're just going to stay on the 15-minute chart, seeing that this is where Asia session was buying from, remaining bullish above these specific New York psychological levels. I was saying to myself, as long as we can remain above, let's just say a 50% retracement of this previous bullish move, I'm going to continue to be a buyer. So I was taking my Fibonacci from the low to the high during Asia session. And I was simply just looking to get in at a discount, placing buy stops above the 50% retracement, right? Giving it some time, heading into London session. London session open is where I entered the trade. You can see that when price action was passed over into London, they dropped price down into a discount from where Asia session bought from. So again, utilizing the CYPRX 2.0 tracking session. If you were to jump down to the lower time frame, you would see that this is a higher low, extending that over to the right-hand side, and I'll go down to the lower time frame to show you guys. So if we go to Asia session, where they bought from, you can see Asia session. Okay. Remember, we like to identify this pattern. Here is a low in the market. Here is a violation of that low. And here is the higher low that comes in after. Highlighting the higher low that comes in after and extending that over to the right-hand side is ideally the discounted area in which we want to be buying from, because this is where market maker demand picked back up after they manipulated lows, right? Jumping back to the 15-minute time frame, you can now see how that level correlates. That's this level here, right? So what was London session doing? They were pushing price down into a discount from where Asia bought from. give or take everything that I've gone over so far, the hourly higher time frame sentiment, the fundamental sentiment, and the order flow now on the lower time frame, we can clearly see is still to the upside, where we're failing to break previous higher low structures and instead creating new higher lows, higher high formations. So my assumption into this trade idea and giving you guys these technical call outs, remember, in the previous fundamental breakdown, what were we expecting? We were expecting a decline or pessimistic US data today. So as long as the bullish order flow maintained, coupled with downbeat US data, my projection was that XRP was going to have some type of significant increase in price action. Now, to what extent that was going to be, I'm not here to determine that. I'm here to take risk and I'm here to target highs. If I'm in buy positions, I'm looking for highs to target, right? Which I went over. So we had that decline in price action where I placed my buy stop. I specifically entered at like the 551, I think it was like 4.5 or something like that. I placed my buy stop above this bearish candlestick. Market reversed. London session opened. We had a nice impulsive bullish move, breaking previous bearish market structure. Higher low was created that gave me a sound place to place my stop loss beneath the Asia session lows. And then zooming out, looking for those previous higher targets. My take profit one was smashed. Although I told you guys I'm not taking profit on this trade, I'm just saying in general, the areas in which I was targeting was this high here. The second area in which I'm targeting is this high here, which comes in roughly at around 57.5 cents, okay, which is almost being met right now. I expect this to be met within the next, let's say, hour or two, maybe even heading down into the Asia session rollover, as long as this price action sustains, give or take slight pullbacks. Now, let's talk about why I was so confident in holding this trade and why I wasn't scared once New York session opened, why I wasn't second guessing myself, and how I further solidified that my trade analogy was set to be met. Okay. Again, let's pay attention to time. Let's pay attention to fundamentals, and let's pay attention to intraday strategies, how risk assets reacted to the US data. Okay. Remember, we're trading XRP up against the US dollar. So US data is extremely important for us to be paying attention to. Here you can see this green impulsive candlestick happened at roughly around 5:30 a.m. This was caused by a dwindling US dollar. We can see here the US durable goods orders declined to 6.1% in January versus previous readings of negative 4.5%. Okay. This is not extremely pessimistic, but definitely downbeat. So what did we see? We saw a shock to the dollar temporarily, which drove strength further into risk assets and further continued that bullish order flow, right? Where you can see here, just like London session, bought from where Asia session bought from, New York session bought at a discount from where London session bought from. So if we were to get rid of this area here and do the same exact process that we just did in Asia session to determine where we should be buying from in the form of a discounted area during New York, we can see, without even jumping down to the lower time frame, you guys can see the pattern that I pay attention to. Here's a low. Here's a violation of that low. Here's the higher low that comes in after. Taking price to a new high, continuing that bullish order flow. So if we were to, again, highlight from the higher low and extend that over to the right-hand side, we can see New York session simply just pushed price back down into a discount once they got past price and then bought, continuing the bullish order flow. That also significantly took place above the medium threshold of roughly around 55 cents, which I explained to you guys on the higher time frame already, right? Where we previously saw sellers predominantly overpowering buyers. What I wanted to see on the higher time frame was that 55-cent threshold flip to the upside and sustain as a demand region for buyers to come back in control and overpower these sellers. What I did not want to see is liquidity grabs above these highs and for us to start breaking back beneath, closing bearish below the 55-cent threshold. That would have completely changed my entire bias if we saw price action like that, right? So moving on to further continue why I was holding this trade, we had the US consumer confidence, right? That came out at 7 a.m. You can see here, this green candlestick, this impulsive move. Again, another downside shock to the dollar because the data came out, i.e. the consumer confidence fell in February to 106.7, down from previously revised readings of 110, All right, so again, another downbeat US economic data report, driving further demand for risk assets intraday. Okay, you guys have to keep in mind this is intraday. The news could come out on Thursday where we see higher inflation readings, and this could all change. You have to understand if you're going to involve yourself in these markets, you need to be extremely reactive. So that gave me even more confidence to hold this trade throughout the remainder of the New York session. Still floating in this position, looking to see if we can just take out these highs. We're scratching the surface of that now. It would be nice to see maybe potentially a slight pullback as we start heading into the ending of the New York session. Either one of two things is going to take place. We're going to see a further retracement down into these lows to revisit before the next trading session rolls over. So Asia session can make a decision whether they're going to buy again at a discount, or we're going to see a slight pullback, sellers trying to guess tops in the market with where price action is at now, building more liquidity above highs, and we're going to see a quick squeeze to the upside to come and target the overall goal of these market makers during New York session, which was to target these highs, is what I'm most likely assuming is going to happen. But let's see.